some interesting news coming from BTCS, which is that Ethereum treasury company is adding an Ethereum dividend, issuing a so-called bividend, if you like that term, and we issue patronage dividends to our NFT holders who are active members in what we're building here at our community-owned media outlet. And so we've kind of paved the way for a patronage dividend as a co-op. I'm glad people are copying us here. They say it's the highest form of flattery. GM, everybody, welcome into another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York City as we are expecting a pretty volatile week as we get updates from the Fed. Of course, inflation remains the focus, whether it's crypto or whether it's public macro markets right now, as everyone's trying to figure out where the Fed's going to go next as inflation continues to run hot here in the United States. That is potentially pressuring pricing that we are seeing this week from Bitcoin and Ether. Bit of a tough start to the week if you look at the numbers and where we're trading right now, which as always is kind of where we start things here at Coinage as we dive into prices. Right now, Bitcoin about 115,000. As you can see, more red than green over that week-long period. If we switch over to ETH, a very similar story, at least in terms of maybe it's not as much red as it is green, but certainly we are watching that level around 4,300 as we are seeing some updates from ETH treasury companies we're going to get into in just a sec on today's show. But appreciate you guys joining us, as always. If you enjoy the show, if you like what we're covering, throw a like on this and throw a retweet so more people can see it. If you don't like what we're covering, throw some comments on there and let me know because we're reading those in real time. So you let us know how we're doing here. Regardless, though, I want to bring up the run of show. What do we got scheduled for today, Tejas? What do we got? Here's what we got. Got a lot going on, as I mentioned, not just the Fed to dig into today, but also just published our video taking a look at the Kwon plea deal. That one's a pretty interesting video. We're already getting some good comments and good reaction on that, mostly because we haven't seen a lot of plea deals. We haven't seen these. If you think about SBF, you think about what happened with FTX, which we're going to dive into a little bit of that with the co-founder of Backpack later on in the show. But Kwon pleading guilty could potentially get back to Korea in as little as 6 years. So a lot of details to dig into that one, as well as a conspiracy theory that's floating around. And of course, it doesn't really seem so much of a conspiracy theory if you think about Trump's New World Liberty Financial Project and the new treasury built around it at Alt 5 Sigma. And potentially whether or not they're going to be touching UST, the once famed Terra stablecoin. Some interesting things to dig into around that. But anyways, let's start with kicking off the show around what we just talked about, the crypto rallying stalled a little bit. The crypto rally stalling here. As we mentioned, prices off the top of the show. Part of the reason why, if we go to the CoinShares report here, Texas, of course, this is always data that's lagging, but I think helpful to include just to show why we're still seeing such continued momentum and why I think any dip here might be a little bit overblown. But then again, we have to wait and see what we hear from Jay Powell this Friday as he's going to be giving a speech out there in Jackson Hole. But of course, looking backwards, this is what we saw from the CoinShares report. $3.7 billion in inflows last week. That's the fourth largest number on record. And as you can see, a big jump up from a few weeks ago as we saw basically nada. And now you got a big blue bar there. In total, CoinShares is also reporting that it's a all-time high of $244 billion in assets under management when it comes to these crypto asset products, investment products. And once again, Ethereum leading the way with $2.87 billion. That's 77% of the total, pushing year-to-date inflows to a record $11 billion. And once again, surpassing Bitcoin on a proportional basis. And so, once again, as we've been saying over the last few weeks, this is an Ethereum-led market right now, not just in terms of DATs and treasury inflows and shares and people buying ETH, which we're going to get into in a second, but also traditional investors just wanting to buy via these ETFs and tracking the inflows there. So it's an Ethereum game still. And perhaps worth noting that that's kind of been what we've seen play out over the last week. There was a lot of ETH-focused events here in New York. It was, of course, ETH Global. So whether it was Tom Lee and other digital asset treasuries speaking at the Ethereum event over in Manhattan, or the hackathon that played out this week. A lot of ETH stuff happening right now. And so that brings us to our next focus, which is, of course, not the Fed yet, Texas. Not the Fed yet, because there's still some treasury stuff to dig into, because it was, of course, Tom Lee's BitMine Immersion Technologies coming out with an update this morning around how much ETH they have now bought. And congrats to the BitMine team. They are now the second largest crypto treasury company in the world, only behind Strategy and Michael Saylor with his Bitcoin stash. The update that BitMine has now exceeded $6.6 billion in ETH holdings, now 1.52 million ETH tokens. And as you scroll through this press release, they remain just as bullish as ever on stacking more ETH to get to 5% of the total outstanding ETH supply. That's the goal that Tom Lee has. And a pretty significant increase in terms of how much ETH they once held. It's a $1.7 billion increase on top of the 4.9 that they reported just last week. So things continuing to move higher for BitMine. And on the other side, some interesting news coming from BTCS, which I will bring up now as well, which is that Ethereum treasury company is adding an Ethereum dividend. And it's pretty interesting to think about that, of course, considering that here, us at Coinage, also do this right now. And we're the first, I guess, I don't know. It's very interesting. What do you want to call us? You can choose. Coinage is a community-owned media outlet, the first Web3 media outlet that is actually Web3. Also has an ETH treasury company. Of course, if you go to the ETH treasury site, you scroll all the way down, you can see us there. And we issue patronage dividends to our NFT holders who are active members in what we're building here at our community-owned media outlet. And so we've kind of paved the way for a patronage dividend as a co-op. But now BTCS, as we bring up their press release, is issuing a so-called bividend, if you like that term. We don't necessarily like that term. I'm not entirely sure what bividend means, but I suppose it's meant to be a shortened version of blockchain dividend payable in Ethereum, aka a bividend, of 5 cents per share to BTCS holders. And pretty interesting. I mean, obviously, again, when you think about it, it's just kind of trying to keep these holders, these shareholders, from selling. And so the way that it'll work is essentially, hey, if you're still on record as a holder come, I believe it's next year, January next year, I'm pretty sure. And hey, we're going to issue this bividend. Yes, a record date of September. So actually, if you opt in and hold by September, then the dividend will be paid out later on in January 26, 2026. And so, yeah, so it's another way of trying to incentivize longer-term holders, people from who might be holding these things and then selling, which, again, is not too dissimilar from what we do here. You can buy a Coinage NFT and become a co-owner, but you have to still hold that NFT and be active to earn a patronage dividend. And so it's kind of interesting. People talk about staking all the time and all these things that have to be on-chain. Dividends, if you really think about it, is essentially off-chain staking. It's, hey, you've got to hold this thing on the record date, which is a snapshot, if you want to use Web3 terminology. There will be a snapshot on that date. All the holders get this bividend. I'm going to stop saying bividend now. Shot every time we say bividend on Coinage. I'm not going to say bividend anymore, but you basically have what we try to do, which is snapshot date, end of the year. We give patronage dividends back to people. I'm glad people are copying us here. They say it's the highest form of flattery. So congrats to BTCS for waking up to what we've been doing for 3 years now. Very good. Very good from our friends at BTCS. Very important. But nonetheless, I do wonder if other ETH treasury companies are going to start instituting the same thing, because, I don't know, I think that there is a louder and louder crowd of people who aren't so keen necessarily about what's happening with DATs. And of course, when you zoom out, price go up, certainly on the Ethereum chart, has been a large part because of DATs buying ETH. Let's not throw that baby out with the bathwater. So certainly number go up, good for a lot of ETH ecosystem projects, including ourselves here at Coinage. So no one's going to poo-poo that. At least I'm not. But of course, the question still remains, what happens if this were to flip? What happens if the premiums we're seeing start to evaporate in these digital asset treasury companies? And that is a big question. I think more and more people are asking it. And is there more to be done around less diluting? The idea of these DATs issuing more shares to buy more ETH and continuing to see more downward pressure on share prices. Of course, we've seen that with MicroStrategy coming out and drawing the line in the sand of where exactly they will continue to buy Bitcoin versus where they won't, and how you want to protect your premium as a guy who's running all these DATs. And so I think it's pretty interesting to think about all that. And now interesting to think about using dividends instead of this financial engineering flywheel that we've seen so many times. And so that is the news on the Ethereum digital asset treasury DAT front. And we'll continue to track that because no doubt, as we've seen Bitmine continue to stack ETH, that probably means that we might see some of the other players, including SharpLink Gaming. I'm trying to bring up this tweet that we had from our friend who runs the Strategic Asset Reserve, the ETH Strategic Reserve site, and bring up a little bit of what he's been pointing out, because a lot of people are saying, hey, is SharpLink going to be buying more here to keep pace with Bitmine? There's a pretty interesting chart, so I just want to pull it up to kind of show how those purchases over time have stacked up and whether or not you'd expect them to continue to grow at a similar pace. But this is what our friend Fabda.eth, who runs the site, was kind of putting up here was, hey, let's take a look at weekly buys from SharpLink Gaming. And if you look at those, in terms of how many ETH is being bought, that is up. And I think it's interesting that you're charting this in terms of ETH versus dollars, because of course the price of ETH always fluctuates. But if you just look at the amount of ETH being bought, that's going up, and it's going up pretty fast. And so you can't really say that anything's slowing down there. And especially as Tom Lee puts his pedal to the metal, if you're Joe Lubin and the rest of the folks at SharpLink, you're basically saying, hey, we want to keep pace. So I don't know. We'll keep our eyes on other announcements throughout the week from those other Ethereum treasury companies. But for now, that is what we are watching play out. Of course, as we mentioned off the top of the show, the big thing to watch this week is all things Fed. And on Friday, we're going to have Fed Chair Jerome Powell speaking at Jackson Hole in Wyoming. This is always an important thing to watch from a macro perspective, because it's basically the Fed's chance to come out and say, hey, look, after everything, this is where we stand now. And you kind of get these updates every time we get a Fed decision, but for some reason, being out there in the nature that is Jackson Hole, in the middle of Wyoming, in the middle of nowhere, not saying Wyoming's in the middle of nowhere. I know Caitlin Long, if she's watching this, she'd be very mad if I said Wyoming has nothing going on out there. That'd be a lie. It's beautiful. And so there's a lot of people going out there to Jackson Hole. But we're going to hear updates from the Fed, and I believe we have this chart from our friends at Bloomberg, looking into the odds of where people are expecting a cut to be or not to be. And these are kind of the expectations of the September meeting, a 25 basis point cut. For our non-macro friends, that's 0.25%. So that's what the expectations are for September. I think that's the highest rated probability outcome for what we're going to expect to hear from the Fed come September. And these are the odds and how they've fluctuated. And as you can see, we're sitting about a 40% chance of a 0.25% cut in July, end of July 31st. Then things spiked. And that was because we had a pretty soft, terrible jobs report. People were expecting, hey, look, the Fed's going to have to make some moves here. But then we got a pretty hot PPI report that said inflation's still going on and inflation's still here. And so you saw the odds of a cut come back down. And so I think all eyes are going to be on this speech to try and glean any more insight from Fed Chair Powell around how he's thinking about squaring a softer and softening labor front and jobs market, particularly, by the way, among younger workers. I don't know if you've been paying attention. I don't know how many younger workers are watching this, but if you're out there, you probably know the job market's getting a little bit tougher with a higher and climbing unemployment number. So it's getting harder to find those jobs out there for our younger friends. And that's usually a bellwether, potentially, of like what's to come. Because you always cut the young guys first. That's just the way that it goes. Having been a young guy myself, that's just the way that it goes. People get cut. And so we're watching those numbers. It'll be interesting to see if we hear anything that may be dovish from Fed Chair Powell saying, look, because the labor market is getting softer, we're going to start to prioritize that over inflation. Do I expect that? I don't think anyone really expects that. You had Trump already challenging him. We don't have the B-roll of them wearing the construction hats, but you remember it wasn't too long ago that President Trump went over there and basically tried to flex on Jay Powell. And as that political game plays out, you never really know what's going to happen. And the market does not like volatility like that. And so buckle up for what this week will show. I believe also there will be some more data out as we go along. So there's a lot to digest. And I think that could be potentially why we're seeing some softness, some weakness to start this week, at least on the crypto front. From unknowns to knowns, let's shift from the Fed over to what we covered here at Coinage, which was, of course, last week. Terra founder Kwon accepted a plea deal with the U.S. government, admitting to 2 charges of fraud for his role in the Terra collapse. I was in the courtroom. We just published our piece. If you haven't yet, you can go to our YouTube page and watch the full piece on the Terra collapse, the plea deal that we covered. And it was pretty interesting being in the courtroom because, again, in these positions, as we've covered SBF, 25 years, Celsius founder Alex Mashinsky, 12 years. And in this plea deal, we don't know how long Kwon will be sentenced to. We do know that he's accepted guilt on 2 charges, and now in December we'll learn exactly how much jail time he'll get, which will be up to Judge Engelmeyer in that case. But the maximum sentence time is 25 years. It had been 130 years, so Kwon trimmed his time down, at least a maximum sentence down significantly, by taking this plea deal. And in that, the government said they chose or promised not to advocate for more than 12 years, so you got to think that that's kind of the new midpoint, and average, so to speak, that you might expect from what will eventually play out as a final sentence, as Judge Engelmeyer delivers that in December. But I think on top of it, the other key components of that deal are that the government also promised to help with a transfer to get Doe back after serving 50% of whatever the final sentence is. So if it's 12 years, that could mean 6 years. He could wind up back in Korea. And if it's even less than that, it could mean even less time. And so, I don't know, I think that that's kind of an interesting component of a plea deal to put in the context of all these other crypto founders that did not take plea deals, went to trial and lost. And now you've got Doe sitting here doing the opposite. So that was an interesting scene that played out pretty quickly in court last week. And I think around that, the other thing, as we covered in our piece, pretty interesting to see UST, the stablecoin, included in what Alt5 Sigma, the publicly traded treasury company for the Trump's World Liberty Financial Project, that they've listed UST as one of the crypto assets that they're playing around with. And we've also seen some rumblings from JP Thor, the founder of Thorchain, potentially creating a Bitcoin-backed stablecoin, which is not too dissimilar, if you don't recall, from what Terra had tried to do in the last innings of the project. They had built up the Luna Foundation Guard and bought up Bitcoin to back their stablecoin. And so to see someone else in the Cosmos ecosystem, JP Thor, now potentially playing around with UST, some other sleuths were pointing out that Kujira or Rujira, the other kind of logo, was used on Kraken around UST. And so a lot of people are watching to see what could happen with the stablecoin that could be included in the World Liberty Financial dashboard, the DeFi platform that the Trumps are backing. And so if you step back and think about it, it again remains one of the most interesting stories, I think, in crypto, and Coinage has just been all over it. And so props to ourselves around covering that one. And again, you can dig into all the, if you're new to this, go watch our coverage, because we still won an award for that exclusive all the way back in 2022 after the Terra collapse. And now, potentially, history repeating itself again with a Bitcoin-backed stablecoin that could potentially be involved in this plea deal, perhaps, depending on what Trump's team wants to do with it at Alt5 Sigma. I don't know. It's crazy to think about. So we'll continue to track that one. And if anyone out there is watching and seeing things as well, by all means, you can hit us up. Mint a Coinage NFT, become a co-owner in what we're doing, join the token gated Telegram, tell us what to cover, tell us what you found, and we report on it here, and we all grow together. That's the way that you grow a true Web3 media outlet. That is Web3. Of course, moving on, outside of everything in crypto, we've got a lot more companies going public. The latest one we've been watching is bullish. I just want to bring up those charts real quick, too, because it was a pretty hot debut. And, of course, that triggered a bunch of other companies to then say, hey, look, the window's open. One of those being the Winklevoss twins at Gemini. Gemini filing to go public as well. We're going to bring up their net losses that are growing in just a sec. But before we do, I want to bring up the chart that shows Bullish's shares in their IPO. Doesn't look as hot when we bring them up this way, but they are hot. I promise you. Mostly because in that IPO, Bullish, which is the parent company of CoinDesk, by the way, they went public on Wednesday, a week ago. And in that IPO, they were ringing the bell down at the NYSE. The guy leading that company, I think we have B-roll of that moment, from Bullish back at the NYSE. They were down there celebrating their IPO, and of course, their CEO running things used to be the guy running things at the New York Stock Exchange, so a bit of a homecoming for him. And the stock opened at $90, trading 150% higher than its IPO price of $37. Peaked at 118, and of course, we were just bringing up the chart that shows that it's now down to 64. So still above its IPO price, but definitely coming down a bit from that first day excitement. So it's always a good kind of heat check to look at where public markets are pricing some of these companies, because obviously, again, same thing with Circle. On big IPO days, you see a huge boost of trading, and sometimes things get ahead of themselves, and then sometimes they come back down. And so that's kind of what we're seeing play out already. And now we have something else to look forward to, which is the Gemini IPO and the Winklevoss twins. However, if you dig into the numbers, it doesn't look exactly strong, just being honest with you here. When you look at the filing, they did show a pretty high net loss. I want to bring that up and show you kind of what we learned in the Gemini filing, because the company reported a net loss of $158.5 million on just $142.2 million in revenue in 2024. Net losses in the first 6 months of this year have already exceeded that number. The net loss was $282.5 million on $67.9 million in revenue in the first 6 months ending June 30. And so when you put all that together, it's not incredibly, I mean, by the way, we use Gemini, all things, being clear here, trying to be transparent. And their fees are pretty high. I got to be honest with you. It's a little bit higher than maybe some of the other things. When you try to move USDC through there, they've, of course, got Gemini USD. It's a little bit higher than some of the other exchanges. And so, you got to think about Bullish and their IPO and their kind of their institutional investor focus versus a Gemini and a Coinbase. It's kind of like what we're seeing play out as these markets kind of splitting between the two. But we don't have final pricing for the Gemini IPO. We don't know at what price shares in that company are going to be listed at. And so we'll continue to track that over time. But it is one important piece to kind of consider. It's not just the DATs anymore that really, as we enter this chapter of acceptance of crypto, it's not just the DATs where we have the ability to track, hey, what's the premium? Where's the public markets on valuing these companies? It's also now, increasingly, more and more IPOs. And so far, they've been pretty successful. So the window is wide open. But it might only take one of these where we don't see that happen, where things start to turn. And that's usually also a bellwether of where crypto is to go. And look, a lot of people are still bullish, no pun intended on our current reference of companies. A lot of people are still bullish on a very strong Q4 to wrap up the year. And a very strong Q3. Obviously, over the next couple of weeks, who knows what the Fed's going to say? Who knows what's going to, swing things here in the short term? But if you listen to FundStrat, Sean Farrell, all the other analysts we have on the show, it's still pacing for a very strong Q4. And so if that's the case, maybe we do see a cooling off over the next couple of weeks. And maybe the cooling off of some of those, if Gemini is to go public, maybe perhaps that's a negative flywheel effect of, hey, we got a little bit of an air pocket here that we hit on one of these IPOs, particularly if it's a weaker company, maybe a company that hasn't shown as much strength. And so you've got that. And so if that all starts to stack on each other, you never know what's going to happen. And so I think it's important to watch all that and to, of course, dig into more of these numbers, perhaps.